Welcome back, everyone. Before we go into today's topic, have you ever wondered how business keeps track of every single rupee they spend or they receive? Well, it all starts with something called ledger, a bunch of tiny but mighty documents called vouchers. Now, if you have gone through the before video, which was about types of books, you will understand that ledger is a secondary book. From cash payments to credit sales, from salaries to rent, every transaction has a story. And guess what? Vouchers are the proof, whereas ledger is the diary. In this video, we will break down what a ledger really is, explore the different types of vouchers, and show you how it all fits together in the world of accounting. Whether you're a student, beginner, or just curious, this one's for you. Let's make accounting simple and fun. Starting with what is ledger? Ledger is an accounting book where the journalized transactions are being classified. In other words, ledger is the principal book of accounts where all the transactions are classified and summarized in a systematic manner under appropriate accounting heads. Each account has two sides, debit side and credit side. All entries from journal are posted to respective ledger accounts to prepare a trial balance and eventually the financial statements. It considers a set of accounts and includes all types of business accounts, which is personal, nominal, or real. A company can maintain ledger in two forms, bond ledger or loose leaf ledger. The process of transferring the debit and credit items from journal to ledger in their respective accounts is known as posting. So, this is all about ledgers. Now, before we go into vouchers, what do you understand by the word voucher? In simple terms, voucher is something which is a written document that provides evidence of financial transaction. Here are the types of vouchers. So the first one, we have supporting vouchers. These vouchers are nothing but the written evidence support of the transactions that have taken place. Supporting vouchers are divided into internal supporting vouchers and external supporting vouchers. The first one is internal supporting vouchers. The organization prepares internal supporting vouchers and the third parties validate it. Let us understand it with an example. So, if you can see in the first image, it is about internal supporting voucher. This image shows a specimen of an internal supporting voucher, specifically a current bank account deposit slip from a syndicate bank located at so and so location like plot number 34 Nampalli, Hyderabad. So this voucher is for depositing money into a current bank account. Then the account details like Raj Private Limited is also mentioned, which means we can take in consideration that it is deposited on some company's name. Then the transaction date is mentioned, check details are mentioned, then the amount to be transferred is also mentioned, and also the space for signing is also there. Hence, this document serves as a record of a bank deposit transaction. So, this is the first kind of voucher that we have learned, which is internal supporting voucher. Next, getting back to the vouchers. The next one is external supporting vouchers. Usually, third parties prepare the external supporting vouchers. Let us see an example. The second image shows us the external supporting voucher. Here it explains that received rupees 20,000 only from Raj Private Limited on account of rent of shop 19H Laktikapul, Hyderabad for the month of January 2017. Now, if you see the relation between internal supporting voucher and external supporting voucher, external supporting voucher is for their reference that you have paid the rent. An internal supporting voucher is for you to know that this much amount had been paid or had been taken from your account for so and so purpose. The next kind of vouchers we have is accounting vouchers. The vouchers made by the accountant on the basis of supporting vouchers are called accounting vouchers. They must be signed by the authorized person of the enterprise for recording in the books of accounts. The accounting vouchers are made for both cash and non cash transactions. These vouchers are of two types. The first one is cash vouchers. Cash vouchers. This, these are some document proof of cash payments and cash receipts, and these are known as cash vouchers. They are again divided into two. One is debit payment vouchers, the second one is credit vouchers. What are debit payment vouchers? The written evidence of the cash payments are called as debit vouchers. These vouchers are prepared mainly for recording the transactions that involve cash payments. For example, cash payments of salary, cash payment of goods, fixed assets and investments, payment to creditors, employees, and bank, repayment of loan and advances, or deposit of cash into bank. The receipt portion of the debit voucher is filled and used as a supporting voucher in case of invalidity of supporting voucher. A revenue stamp of rupees 1 is affected if the amount is 500 or more, and the recipient's signature is taken crossing the revenue stamp. So here if you can see, this is an example or format of a debit voucher. Continuing with the same example, if you can see here now, the Raj Limited had paid 20,000 for some furniture account. And also, there is an important note for this. The receipt portion of the debit voucher is left blank as the supporting voucher is available. The supporting voucher will be attached with this accounting voucher. So always the left will be blank for the supporting voucher or if the supporting voucher is available. Next one we have is credit vouchers. The documentary proof of cash receipt is called as credit voucher. For recording the transactions of credit receipts, these vouchers are prepared. For example of cash vouchers are rent or any other incomes, cash receipts on interest, cash sales of goods, assets and investments, cash obtained from debtors, amount withdrawn from bank, loans, borrowed, etc. This is an example of credit voucher. Here if you can see, Raj Private Limited had sold some goods for some 20,000. So this is the evidence that the sales has been done for amount of 20,000. So this is the credit voucher. Moving on to the next one. We have non-cash vouchers. Non-cash vouchers are also called as transfer vouchers. They are the written evidence for transactions that do not involve cash. It is prepared for the credit transaction. Examples of non-cash vouchers are credit sales of goods, fixed assets and investments, or goods returned, or writing of bad debts and depreciation. Now this is an example for transfer voucher or non-cash voucher. Here if you can see, Raj Privates Limited is debiting machinery and crediting Ram's account, which means the machinery is purchased via cash from Ram. And what are you getting in return? You are getting machinery in return. So this is what this voucher proves. Hence these were the ledger and vouchers that involved in accounting. Thank you.